The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and we got a fun, exciting day. Had a little bit of a chop going on in the morning. The market got chopped on down a little bit further with the bad news that came out of China. So they are continuing to have problems moving forward, and not necessarily moving back so much as they're in stagnation. And, you got Japan trying to do things, trying to figure out what to do and giving up on certain deflationary policy and going for inflationary policy. And it's a crazy market out there. Had a long trade on gold this morning. It looks like that one's turning out pretty well for the day. And got some other trades going on. So we just have all sorts of stuff, all sorts of different ways that you can play it. And today and every day here on the Diagnostic Trading Hour, we like to go in and do a market wrap for you. Just sort of let you know where the market's sitting at right now. So on the S&P, we got it down still 3.5 points on the day. We got the Russell down 4.5. We got the NASDAQ down 5 and the Dow down 13. Over on the metals, we got copper down 1% on the day. So copper is making some moves, down 0.052 there. We got gold down 40 cents, barely off of yesterday's close, but is starting to move on back up to the highs there. We got silver pretty flat. Overall, from yesterday's close, it's just down 0.087, which is 0.25%. And natural gas being a big mover today, up 1.23%. So we'll be talking about that here in a little bit. And then looking over on at the energy there at CL, we got oil, which is up 72 cents on the day right now. Been bouncing all over the place, and has made some, made a half deviation move down, looking like it's moving on back up. We got corn, which is down 1.6%, and soybeans down 2.4%. If you are not trading these markets, you may want to check them out. You got to be careful. Check them out on Nadex, and we'll be talking about that also. Looking over at the Aussie dollar, we got the Aussie dollar, if I'm looking at the spot market, is currently down, let's see here, 69 pips. Pound dollar down 31, euro dollar down 103 on the day. So euro is definitely doing a little pull down, and even with that, so of course, if euro's going down, dollar's going up, but we're still seeing gold rise. So a lot of people were afraid about these Spanish bond auctions that came in today. Came in much better than expected. A lot of optimism built in from the ECB and their promised bond buying program. However, there is the reality that what are they going to do? They said we're not going to ask for bonds if we have to have all these austerity measures. And that's what the ECB said. We'll buy unlimited bonds from everybody so long as they agree to all of our requirements. And Spain has elected leaders that basically have said that they're going to say no. So if they say yes, that's going to be real interesting as well. You don't talk about some riots in Spain. So once the market figures out that Spain is not going to bend that easily and that the crisis is a little bit bigger, we could be looking for a little bit of an explosion on that side as well in the coming weeks. Either definitely this quarter, if not early next year, we ought to be seeing a big spike in Spanish bonds. And they're going to have to figure out whether they're going to agree or not agree to austerity measures. If not, then what are they going to do? Because where's the $1 trillion going to come from that they're going to need to get a bailout? So that's a summary right there on the market, your market wrap right there and where everything's sitting at. Let's go ahead and check out our fundamentals. So on the fundamentals, the economic reports that have come out today, what do we got going on? And, well, we got unemployment claims came in today, worse than expected. They expected to have 374. We had 382,000 reported. And last week, it was a little bit better than expected. The week before that, a little bit worse than expected. And it really has not been ticking down. So really just not the numbers that they need to be seeing. And so just more justification for all that fun QE to, taxate you without legislation and without your vote. And, it's funny. You got a president in office saying right now he only wants to tax people, raise taxes on people above 250. But reality, QE is taxation on everybody, and it hurts the poor more than anybody else since they don't have any kind of equities. They don't have stock. 13% of people below the poverty level have stocks. And you look on down, I mean, they don't have gold. They don't have, assets that they own. So a large majority of them. And so they're getting taxed more than anybody by QE. So those who actually have their money in assets, at least they have the ability to, hedge against that inflationary bias that takes place from that. So it's the ultimate tax. And the tax that you don't vote for. You got to love it, right? I think we had a Tea Party once because they didn't like taxation without representation. Well, QE gives more weight to that than any other legislation that could possibly happen, considering it is not legislated. So, anyways, looking at some other things, what else is happening? We had some reports come out last night. Like I said, the Spanish bond came in. A little better than they thought it was going to come out. So came in, they got 5.67 average, and they were 6.65 at the beginning of August. They were 6.43 beginning of July. So they had to do something before it broke that 7% mark again and started moving on up. And so if they get up and they break that 7% mark, they haven't broke it. I don't think actually they've even broke it yet, but they were edging to 7%. And that's why Mario Draghi had to come out and make all the statements he had to make, was to stop that thing from busting through 7. And so he did bring it back down an entire point for at least a month. And we'll see out of the next 3 auctions that are remaining this year, October, November, and December, what's going to happen on that. So that gives us a Spanish 10-year bond auction summary there. We had a lot of European reports come out. The flash services and the flash manufacturing PMI came out of France, came out of Germany, and came out of Europe. And France came in worse than expected. This is a survey of a bunch of manufacturing managers and basically what they think is going on in the market, and they go through and it's pretty much a lagging indicator, looking at unemployed people, economic health, things like that. So it doesn't have just a huge dramatic impact, but nevertheless, Germany came in with reports that were a little better than expected. France came in worse, and overall the EU as a whole came in worse on the manufacturing PMI, and actually I guess came in a little better, 46. They need to be above 50. Came in at 46 on 45.6. On the flash services PMI for Europe, they actually came in at 46 versus 47.6. So, and the flash services is leading, the manufacturing is lagging. But either way, overall, Europe was not looking good in those reports. Retail sales actually ticked down in Britain as well last night. So obviously not a great thing for Britain, hence a drop in the pound. And we'll see how that continues out for the rest of the day. And then, of course, like I said, here in the U.S., unemployment claims not coming in good. Well, right here in the United States, we also had a flash manufacturing PMI number come out, so it's just the flash manufacturing day of the week. And here they survey 600 purchasing managers and asked them about all sorts of different economic-related things. And it came in a little bit below expectations at 51.5. Ideally, it's above 50. It was above 50, but still not a great thing. That came in at 9 o'clock Central, 10 o'clock Eastern time, 8 o'clock Central, 9 o'clock Eastern time. And you got Lockhart, man, he just out there talking all he can, trying to do what he can. And he came on this morning at 8:30 and trying to save the market, I guess. But he basically delivered a speech called Workforce Development. And he was at some big conference called the Future of Workforce Development, hosted by the Federal Reserve Bank in Kansas. So I wonder if Kansas is going to put out a poll like San Francisco Fed did. So if you got our show a couple days ago, we went over that. It was hilarious. Philly Fed Manufacturing Index came in. It was at a negative 1.9. They thought it'd be negative 4.1, so that actually is an improvement because it's less of a negative. And it's a big leading indicator as well. So that was a positive. That's one of the biggest news announcements of the U.S. today next to unemployment claims. And we had natural gas storage, of course, come out, and we know that natural gas definitely had a bit of a move overnight, and you can see that right there. So looking at natural gas and the big crazy spikes that took place on natural gas today, right here when the report came out at 9:30 Central Time, you can see it just flew down, flew back up, came back down, flew back up, came back down, and then just basically was right where it started at. And natural gas, the report came in at 67 billion. They thought it'd be 66 billion of British thermal units in storage. And so they had a little bit more than they thought they would. So overall, that's a little bit bearish, and that's why you had the initial massive drop on it. And one of my favorite plays is to hop in on that whenever I'm able to do that one. And let the bounce happen, read the number, and then when it retraces back up to the pre-drop price and that bounce happens, then go short and try to grab a good chunk of that bounce. So, little summary right there on the natural gas announcement for the day and ways that you can play that. And then we got another FOMC member going to come out and have a little speech today at 4 o'clock Central, 5 o'clock Eastern Member so however you say that, his name there, he's talking out at Miami University to the Farmer School of Business Executives. And it's a big speaker series, Oxford series, and there's going to be a question and answer time, so that will be fun to see how that one comes out. And we got Aussie has a CB leading index tonight, and there'll be a couple other reports coming out in New Zealand that aren't really that big of an impact. The CB leading index will have a decent impact on the Aussie, but nothing massive. And basically they look at 7 different indicators related to money supply, like how much money is out there moving in the market. So of course that's a QE type thing. And it's interesting, the Aussie is actually starting to become a reserve currency. A lot of the countries are actually starting to pick up the Aussie and put it in their banks. And they'll be looking at building approvals, profits, exports, inventories, interest rates. And it's somewhat leading. Of course, it's based on a bunch of historic information. So it's not completely leading. It's just like a composite number. And it has been edging higher and beating expectations pretty consistently almost every single month recently. So that's good for the Aussies over there. And then checking out what we got going on tomorrow on the fundamental side of trading. On the fundamental side, we got the public sector net borrowing coming out from the pound. And basically that's a number that indicates if it's positive, okay? It was negative last time, it's positive like the last 2 times before that. If it's a positive number, it indicates that there is a budget deficit. A negative number indicates there's a budget surplus. So, and they bring in all the financial interventions as well into the number. So, and they basically release the figure that excludes them and the one that includes them at the same time. And that'll come out at 4:30 Eastern, 3:30 Central Time. And then Canada is going to have some announcements tomorrow morning. It's going to have their core CPI. It's going to have their CPI. It's going to have their wholesale inventories, the core CPI being the biggest, most important number. What is core CPI? Consumer Price Index. So it's basically accounting for inflation, is what it is. It's an inflation indicator for the currency on whether or not they need to make any kind of moves. So far, Canada has been pretty reluctant to make any additional moves. They were a lot safer in the whole financial crisis with the housing market because of the regulations they had to keep a lot of the stuff that happened in place from happening to them. And then Lockhart will speak tomorrow again as well, so at 12:40. And that will wrap up the week. So it's going to be a pretty quiet week. We're not going to have anything really going on in the U.S. Don't expect a whole lot of movement unless something else explodes overnight. We shouldn't see a whole lot happening tomorrow afternoon. But that gives you the down and low dirty right there on the fundamental reports for today and for tomorrow. And, we got the Chinese stuff, the economic data looking very bad. The Japanese trying to do some sort of, QE. I think it's QE8 now for the Japanese. And talking about just destroying the currency. And the Eurozone is actually working on changing their whole ESM policy to satisfy the German court with basically the statements they made from their ruling a couple weeks ago. We'll talk more about that when we come right back after this break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here. Okay, so one of the things we want to talk about is how the ESM is moving forward. So there's been a word out already that they've come up with a modification to the contract to exceed the deal with the two big issues that the German Supreme Court had when it made its ruling back on September 12th. Those two issues were they not want to allow Germany's requirement of obligation for the ESM to exceed $190 billion unless Germany's parliament agreed to it. So they added that to the contract. They also said that they wanted to have the ability to access any of the secret information of the ESM, that wanted the parliament to be able to access that without that being impeded. And so they added that to the contract. So it is expected that this will be actually released and put together, and as early as next Wednesday, they're expecting it to be signed in Brussels. So all the nations coming together and signing it. There may be some last-minute changes, but they think it's going to be signed next Wednesday. So that, of course, will be bullish for the euro, sort of. Printing money, bad. I mean, it's good and bad all at the same time, right? Sort of like QE, good and bad. So, in my opinion, more bad than good. But anyway, so it's coming out, and they expect it to actually be fully operational by October 8th. So, and it's supposed to help out with the lending capacity for the Eurozone countries. But right now, it's still capped at $500 billion, okay? $647 billion. Well, Spain alone could easily need $1 trillion. And Italy could need $1 trillion. So it still isn't a solution. So I don't know, like, what all this fuss is about. We've made, we had the European Stability the European Financial Stability Facility. And that one's going to be replaced by the European Stability Mechanism. And this keeps going. They just keep coming with a new name every 6 months. So who knows what the next one will be called. But this one is supposed to unify everything a lot more and actually be a formal, resolution to the problem. And the goal was to have it in before January, and if they sign it next week, they think they can actually have the ESM up and running. And that, of course, would lead to why the Spanish bond yields may have came in lower than expected, because I think, hey, you know what? They're about to put this thing together. They can actually get the money. They still have to agree. They still have to agree. So we'll see whether or not they actually do decide to agree to the requirements that they're going to be given. So that gives us, a quick summary on just overall market, what's going on. We got some other things, of course, that are out always in the market, different stories coming out. And, it's just a good idea to keep an eye on these things, because if next Wednesday, Greece, it looks like there are going to be riots whenever they sign on to additional austerity measures. And then, of course, at the same time, you look like you're going to have possibly a signing of the ESM treaty next Wednesday. So both of those things happening at the same time. Tomorrow, we got Triple Witching Friday. So if you don't know what that is, Triple Witching Friday is, by the way, usually a very, very, very positive day. Historically has been positive. What I say, 6 out of the last 7, 8 out of the last 10 have been positive Fridays. So seasonally, here's your seasonal thing for the day. Triple Witching Fridays are usually very positive. Okay, and if you're a stock trader, there's some stocks that actually trade better than others that have historically like a very, very good response to Triple Witching Fridays. And so you can check those out. And there's just different ones to play with. But, we may bring up a few of those examples here in the show. And but just be aware that usually is a positive thing on the market as options expire and contracts are moved around and positions are traded and, on down the list. Now, the week after is historically a very bearish week. Okay? The one thing that could throw that seasonality off next week would be an ESM treaty. So, which could, strengthen the euro, weaken the dollar, therefore pour more money into the market. So, which also would be bullish for gold. And so just, keep all those things in mind. But historically, week after Triple Witching Friday in September, that week after is a negative week. But Triple Witching Friday itself, being Friday, is usually a positive day. So don't make your trades just based on it being positive. Look at the charts. So diagnostic analysis is not one, but it's 4 areas. It's looking at your seasonal tendencies. It's looking at your fundamental announcements coming out. It's looking at your technical setups and your deviations. So your implied deviation levels or your statistics. So all those things combined are what bring together a diagnostic trader. And so being aware of each one of them as you're making your trading plan of like, hey, there's a bias to the upside tomorrow seasonally. If that starts to take off and you see that happening, okay, this is in line with the seasonal. I got the technicals confirming it. And then how far do I expect it to move? Well, that's where I bring in the deviation levels. So, and there's not a whole lot of news to stop it from being a bullish day. Because we don't really have much of anything coming out tomorrow as far as the United States is concerned. So when you put all that together, then that can lead easily to a bullish day. So just a nice plan for you to be able to put that together for your Friday trading, and hopefully you can get on some nice, solid, good trades and take advantage of that. So when we get back, we'll we talked about fundamentals, we went through some seasonals, we're going to go through some deviations. Next, talk about some statistics and how far the markets move, see any setups that might exist or have existed so you can know how to plan in the future.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Darrell Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Darrell Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Just want to go ahead and remind you, if you haven't got one yet, hop over to TFNN.com and click on the Nadex banner. As soon as you click on that, click on Create Account and click on either Open a Demo Account or Start a Live Account. From pressing the Start button to funding can take you less than 5 minutes, and you'll be ready to go. It only takes $100 to fund the account. To open a demo account takes less than 15 seconds. So it's really fast. Just hop on there, put in your first name, your last name, your demo, your phone number, your email address, hit apply for demo. And then you will get all set up and ready to go. So, but, I mean, they send you an email, you get a password, you can log right in, get access to everything. So all these things we've been talking about, these crazy markets, wanting to hedge yourself, then this is your opportunity. So check out Nadex. It's time to trade up the way you trade to Nadex. And it's a better way to trade. Once you get used to it, it is so much better. And it doesn't take that much to get used to it. Going on to TFNN.com, other thing that's very important, go ahead and check it out. We are filling up fast. I heard there's about 30 to 40 slots left right now. So go over and click on Free Live Workshop. Okay, Free Nadex is sponsoring it. We're giving over $2,000 in prizes away. And click on Dynamic, and that's like silver, books, all sorts of fun stuff. And go over, register. If you're going to be in Tampa, it's going to be in-person live, okay? So in-person live workshop, 8:30 to noon. And you'll be able to hop on here. You're going to get an introduction. You're going to learn about Nadex from Dan Cook from Nadex. You're going to have Tommy O'Brien teaching you about identifying the trend. I'm going to go into strategy and system and style on diagnostic trading, and the strategy of spreads and binaries, and different systems that I like to use. And of course, we'll combine that with the systems that Tommy likes to use, and we both combine them together. And just style, interpreting the markets. And so then we're going to go into setting up the trade and how to set your trade up and have everything in place. And me and Tommy are going to talk about risk and money management. The number one rule in trading is survival, and risk and money management are number one. You got to get that down before you get anything else down. And if you've been there, it's a rough lesson to learn, but it's the number one lesson to learn. And the sooner you learn it, the better it is. But we'll go into that, and we'll teach you, some tips and tricks and things that we've learned. And then we're going to wrap it up. But it's 3.5 hours, power-packed. It's free because Nadex is paying for it. Hop on there, register. Make sure you're going to be able to attend if you do register, because we are saving the seats, okay? But just fill your information and hit submit, and we'll hold that spot for you. But like I said, it is filling up. So I was talking to Tom yesterday, and it was like I said, we got 30, maybe 40 spots left. So you want to grab them now while you can. If you're going to be in Tampa on the 29th, we're going to be having it right there at the Grand Hyatt Tampa Bay Hotel. And it's going to be a Saturday. So anyways, hope y'all are able to join us. It'll be fun to see you in person, and a lot of good things that we're going to be able to go over and teach you and help you learn. And so again, that's just 9 days away. So grab it while you can. So Nadex has a lot going on. There's a lot on their website. I want to show you a few things about how to get around on their website. One of the things is go here and go to range of markets. Okay, and on here you'll see they have stock indices, forex, commodities, and events. Most people are going to focus on stock indices, forex, and commodities. So let's say we're looking at stock indices, and we can click on that. Right here, they're going to tell you about binary options and bull spreads, and they'll show you what indices are available to trade, okay? And they'll give you examples of binary options, like I said, and bull spreads. So you can go here, you can click on this, and they'll go into an example on the US Tech 100, and they'll go into an example on the bull spreads. Now, you may have additional questions, and if you do, I'm here for you. So give me a call, 877-92... Oh, wait a minute. There we go. Yeah, 927. I'm right. 6648, 877-927-6648. And here to take your calls and answer any questions that you do have. Now, the other thing is we go back over, you got the contract specs. See this right here? Contract specs. So if you click on contract specs, this is going to let you know like what month they're following. It's going to let you know what times they trade. How many strikes are going to be available, and what the sort of the rules are for that, and the rollover schedule, like when do they start following a different contract, what are the holiday hours that they're closed. There's even a glossary on here you can take advantage of, which will go into just a lot of the basic, like what does floor and ceiling mean, what does the range mean, what about expiration value, how's that figured out, last trading day, so strike widths, trading hours, take point values, things like that. So some really great information on here, webinars, there's handbooks on Nadex. So Introduction to Nadex, Binaries 101, so a lot of good resources. There's an FAQ page, so it has a lot of good FAQs, frequently asked questions there. And you can go into, like how to make a binary trade, how to make a bull spread trade, and take advantage of that as well. So anyways, that's a really, really nice thing. You can hop on there and, like I said, take advantage of it. Now, some other things that you can do is, of course, sign up and get a demo account so you can see how this thing actually works. Because it makes a lot more sense once you start to hit the buttons, and it's a lot better to hit buttons in a demo account than a live account the first time around, right? So experience is a very expensive teacher in trading. And so if you are looking at that, and if you're doing that, then you want to go in and hop in, you log in, this is what you're going to see. And let's see, I'll refresh right there. And so you can go, I want to go to indices bull spreads, I want to trade the S&P 500. And then you can go through and you can actually look through the different bull spread contracts that are available and see the risk reward, and some really, really good setups that are right there for you. So you can see like this one right here, you got a risk of $28 with the reward potential of 272. Okay, this one you have a risk of 14, 40. Let's see, let's do the live price. We'll do that. Risk of $10, reward potential of 290. So as long as the market is lower than where you sold it at expiration, you don't lose anything. And if it's anywhere between where you sold it and the ceiling, see where it says 1450, the ceiling, then that actually is the difference. Like you actually get some of your money back if it's in between there. Okay, it's not a true false statement like a binary. It's an up down. Okay, it's a trade that you're buying or you're selling. You're bullish or you're bearish. They call them bull spreads. I call them box spreads because they're bullish if you buy them, they're bearish if you sell them. So bull bear box spreads. And so you got the bear spreads, then you also, the bull spreads, depending on which way you want to look at it. And then you got the indices. Okay, on the indices, on the binaries, you can go in and you can look at different binary strikes with really high payouts and different ways to trade them. And one of the mistakes I see people make all the time on these is they go, oh, wow, $5. I can buy that thing for $5 and make $95. And they just get so excited, okay, that they can go in there and place this trade and make so much money. But that's a lower probability trade. Basically, what you're saying is to make that $95 on that trade, it will have to close above 14.58 at 4.15. That buy means true on a binary, so it's a true-false statement. Whereas what you may want to do is go, you know what? If it goes from $5 to $15, I've made a 200% return on my investment, 200% return on my risk. So why not just buy it for $5 and sell it for $15? And how far would it have to move to be worth 15? Well, looking at like if it moved right now 3 points, okay? So you can see like basically this price would move up if the market moved up. So if I bought it for $5.50, then I can sell it for $16.50 if the market rose 3 points. And that's a great trade. That's basically, like I said, going and making a couple 100% return on your investment. Waiting for it to get to 95 is throwing $5 out there trying to win the lottery ticket. Not the best trading method. But anybody who can double their risk on a consistent basis is going to be a great trader. So as long as you can win, let's say 50% of the time, you're going to be a really good trader, right? So that means you're like losing $50 when you lose 5 times out of 10, and then you're making $100 when you win 5 times out of 10. So you're making 250 out of 10 trades. That's not a bad deal on your net profit. And so go in, check that out, and again, think about your not just your maximum profit, but be thinking about the profit potential of a double return on your investment, a $5 to a $15 trade. Okay, that's a lot more likely, and it's a lot more realistic goal, and can lead to a lot happier trading results. So whereas going in and going for 95, yeah, you're going to be happy when it happens, but you may not get it. So that's one of those things you want to watch out for. So it looks like, the gold market looks like it may be closing down over there, so that's good. So the binaries went long on this morning, made some money. Anyway, so long basically at 1766, and then again at 1763, added in some more, and as the market started to retrace and bounce off of those deviation levels. And so let's go ahead and talk about the deviation levels right now and see what we got running across the board. If there's any setups that we might be able to take advantage of at this point. And so we got ES right here. We got the S&P. And the S&P, let's back out from the 1 minutes. Let's go to like 15-minute bars. It makes it a little easier to look at everything. And we can see that a half moved down, 1447.31, and we busted that, right? 1447 there. And down to 1444.83. Okay, so we hit that about right here, and just sort of spiked against it, and then 1441 would have been a full deviation. So basically the 0.7 deviation, and then it made a full retracement back up to 14 almost to fill the gap. So the gap is right there. So it's within reach for the day. It may decide, and gap trades fill a lot, so very, very, very often. And I was a little shocked. I didn't sort of expect that this morning looking at the market at first. But it could pull on back that great gap trade to 1453.50, and if it does that, then there we go. We're not that far away from it, and that'd be a full basically a 0.7 deviation retracement back on up. So looking over at the Russell, so on the Russell 2000 here, what we got going on? It looks like it's doing the same thing on its way on back up. 842. We had an 843.06, so it basically just busted that 7 level also, and went on back up, 0.7 deviation, and it's edging its way higher. On the NASDAQ, with all its running with Apple and everything else, let's see how it's doing right now. Got the NASDAQ, it went down to a low of about 28.37, and we had a 28.34 deviation level, so it didn't even quite make a 0.7. It did hit the half deviation, 28.39. Basically just nicked it and flew on back up. And looking over at the Dow, let's check out the Dow right now. So the Dow, checking it out, it is at a low of overnight 13.426, and it looks like a 420 would have been a 0.7. So we got that 4.2 just a little bit further, would have made it to a 0.7, but didn't even quite reach there. It went down to 13.442, and that was one deviation. That sort of basically served as a support line. Because it sort of hit it and bounced off and hit it and bounced off again, is moving on back up as well. So we may see some gap fills on the day. We'll see how this goes. And it's got a couple more hours left. And looking over at our copper, let's see if that's taking a little bit of time to load up there, so we may move on to gold. And so on gold, let's see what we got going on. Gold moving on down here to a low of 1757.7, and we had a deviation of 1758.6. So it basically just barely nicked that. As soon as it hit it, bounced, hit it again, bounced. These make for great reversal plays. Great for buying binaries, great for buying spreads. So also, if you are short, these are the points where you want to be tightening your stops, okay? So the deviation levels, implied deviation levels, not standard deviation levels. And then hopping on over and looking at a couple other markets, let's check out silver. So silver had everything just sort of popped down and on back up. And so maybe setting up for that Friday rally that you usually get on the triple witching Fridays. So on silver, we got a low down here at 34.12. And let's see here, that did move down to almost to 0.7, 34.09. So it almost hit it, and if we go to the half deviation level, which would have been at 34.23, we can see that really did serve as the support line. Would have been a great take profit area. Would have been a great reversal area as well. And so you can see this, the statistic side of diagnostic trading definitely helping give you an edge on how far to expect the market to move. We'll go ahead and also check out natural gas, having some wild swings lately, and 2.747 on the low side. It looks like 2.719, so did not quite move that far down at all. On the low side, what about the upside? 2.821, and let's see here on the upside, 2.821. That is a 0.7 move up, so 2.822 would actually have been a 0.7 move up. So it hit that, so it dropped down, popped up on that news report, came back down, and then just basically coming together, making a little triangle there. So. And based on that, I'd say it's going down with the additional amount, but who knows with these energies lately. Just follow the charts and ride them to wherever they go. Corn has had a massive move today. So let's see how big of a move was that based on the expectation. 739.03. So if we go on down, it busted the 0.5, it busted the 0.7, it busted the 1, did not quite get to the 2. So 1 was at 744.32. Which was basically where it's at now. So this is a 1 standard deviation level. So it pulled back to that 1, an implied deviation level. Pulled back to that deviation level and sort of stalling out there. So we'll see how it goes. If it does continue to drop, it has the potential to go down to about 732.14 today. That would be a pretty big continued move, though, for the afternoon on corn. So I think it's chilling out now. At best, it's probably going to rally, if anything. If it did rally, it could rally back up pretty high. So I'd say just looking at the chart, right, the technical side, probably at a level of around 753 or so, maybe a rally point that it could actually get to if it decided to move up. But it usually does a lot of its move in the morning. So let's go over here. Let's check out the soybeans. They've been moving a lot as well. They moved all the way down to 1620. Which is a recent low for it, and 1620 would have put it almost at 2 deviations, but not quite. So, that's 16, basically 16, 17 is 2 deviations. It may go ahead and push that down. I mean, it's been pushing pretty solid. All the commodities, or not the commodities, all the ags, they've been doing a big pullback ever since we got that reversal right there, that ABCD reversal going on. So, and it just confirmed the ABCD reversal again today. So stay right there. We'll wrap up with our FX pairs, and we'll keep on trading.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and wrap up on our currencies and sort of see where they sit in the midst of all of this. So going over, and we'll pull up the Aussie dollar. And looking at the Aussie dollar, it's tighten on down to look at time frame there. And we'll pull it on up. There we go. So Aussie dollar had a big move down last night and moved on down to 103.67. On Aussie, that would have been huge. That's basically almost a 2 deviation move down on the Aussie dollar. So it had a pretty big drop, much larger than expected. Expected to be 104.14. Look at that. It's at 104.14 right now. Did not make that up. So pulled it right back to a 1 deviation level and is stalling out as we speak. So right there, Aussie dollar. Going over, let's check out the euro dollar. And it, of course, also had a nice down move last night. And so the euro dollar down, and let's see, it hit a low last night of, I guess really this morning, 1.2918. And looking on the Aussie dollar, or euro dollar, 1.2918, about 20 ticks away from 2 deviations. Chilled out. So it's probably also exhausted. Wouldn't be surprised to see a little bit of a relief move up before the day was done, but not a lot expected. And coming over here to the pound. Wow. So dropped on down to 1.612. And on the pound, 1.6162, 1.6153 would have been a full deviation. And 1.6173 was a 0.7. So basically tightening stops right here, which would have served as a perfect support level for taking profits and for looking at potential reversal plays. And then looking over at USD CHF, so the US franc, and what we see right here is rally. So on US franc, we go over and check it out. How far up did she go? She went up to 0.9355. So US franc 0.9355 would have been a move past the 1 deviation, and which would have been, but not to the 2. So 0.9327, 0.9327. So basically right here, I want to make sure I got that number right for you. Yep, 0.9327. So right here, basically the 1 deviation level. And you can see it hit that, stopped, hit it, played with it, came back up, came back to it, and it's sort of chilling out right in that zone. So it looks pretty flat for the rest of the day. One thing I like to always look at is Euro franc. The interesting chart here, you go back and how they pegged it. So where could it go down to? Well, it's not going lower than 1.2. So, if you want to play in a trade, there you go. If you want to go short, that's how short it should go. They will not let it go lower. So it's a fun thing to go in, and you can scalp that puppy all day as long as you can get enough in to cover your bid-ask spread. But 2012, it looks like it goes as low as 2004. You're talking 8 ticks up and down, but just grabbing, just a little bit of move right there. And if it spikes up a lot, then awesome. But if it gets back down to that level, that's your easiest trade ever. So just don't go short it, just go long it, because the central bank, and then put a stop like below this low here, 1.997. So you can put it 10 ticks below it or whatever. But just an interesting trade since they've pegged the rate. So I'm interested to see if euro keeps dropping. Get ready for some euro franc scalping. Anyways, checking out on over here, euro franc. We got US franc. We already did that. Check out US Canadian. On the US Canadian, zooming on in to see how it's playing out for the day. And backing up, making sure we got the full day. And it moved up to 0.9815, and we got to move up to 0.9815. Basically, 1 deviation, 0.9791. So right around here, and you can see it spiked it, hit it, spiked it, hit it, came on back down. It's done for the day too. All right. Well, deviation levels working great. Fundamentals letting you know what to expect, what's coming up. Technicals setting themselves up. Follow them, and just keep on trading. I'll see you tomorrow.
Is the